Have you ever stopped and asked yourself, what if the next Nasdaq isn't an exchange at all? What if it's a blockchain? What if the next Apple, Google, or Nvidia isn't a company, but a decentralized protocol running on Solana? That idea sounds insane until you start connecting the dots. And that's what we're doing today. Welcome to the Block Analyst. Today's deep dive goes far beyond the usual comparison headlines. We're not just asking why Solana is called the Nasdaq of Web3, we're asking what that actually means for the global economy, for market structure, and for the future of capital formation itself. Chapter 1. Understanding the comparison. When people in finance say Solana is the Nasdaq of Web3, they're not just making a marketing statement. They're describing a structural shift in how value, liquidity, and innovation are organized. The Nasdaq represents centralized innovation. Solana represents decentralized velocity. Both are networks of capital and technology, but one belongs to the 20th century and the other belongs to the digital-first, borderless economy of the 21st. Chapter 2. The architecture of Nasdaq. Let's deconstruct what Nasdaq actually is. Nasdaq isn't just an index. It's a market infrastructure, a trading engine, a matching algorithm connecting buyers and sellers at scale. In the 1970s, Nasdaq pioneered electronic trading when most of Wall Street was still moving paper slips. It digitized the stock market decades before digital was a buzzword. That's why every technology giant, from Apple to Microsoft to Amazon, chose to list there. By 2025, Nasdaq represents over $25 trillion in market capitalization. It's not a company. It's a mirror of the modern technological economy. Apple, Microsoft, Google, Nvidia, Meta, Tesla, each of these names forms the skeleton of the digital age. When you invest in Nasdaq, you're effectively betting on the continuity of centralized digital capitalism. But that's precisely where Solana challenges the old world. Chapter 3. Solana, the network state of Web3. Solana isn't a company. It has no headquarters, no CEO controlling the order book, and no listing committee deciding who gets to join. It's permissionless infrastructure. Launched in 2020, Solana's architecture was built for one thing: throughput. While Ethereum struggles at around 30 transactions per second, Solana pushes over 65,000 TPS, and in stress tests, even more. Average transaction cost less than $0.001. Block finality under 400 milliseconds. This isn't a cryptocurrency, it's a high-frequency digital substrate. Developers build DeFi platforms, NFT ecosystems, AI agents, and payment rails, all inside this permissionless network. If Nasdaq is the digital Wall Street of Web 2, Solana is the Wall Street protocol stack of Web 3. Chapter 4. Financial DNA. Nasdaq versus Solana. Both systems share a DNA of innovation, but their design philosophies diverge completely. Nasdaq, centralized, regulated, efficient, predictable. Solana, decentralized, chaotic, experimental, anti-fragile. Nasdaq operates under the US SEC. Every company listing passes disclosure rules, audits, and governance frameworks. Solana operates under code. No filings, no gatekeepers, no human discretion, just smart contracts. Where Nasdaq hosts companies like Microsoft and Nvidia, Solana hosts protocols: Jupiter, Tensor, Radium, Orca, MarginFi. Each of these functions like a decentralized company, with tokens instead of shares, communities instead of boards, and DAOs instead of CEOs. The comparison isn't symbolic, it's structural. Chapter 5. The economic logic. Let's analyze the economic substrate behind each. Nasdaq, centralized capital allocation. Equity markets dominated by institutional investors, liquidity concentrated in ETFs like QQQ. In Solana's world, you deploy capital into protocols that earn yield every block. The velocity of money inside Solana's ecosystem exceeds the velocity of money in any centralized exchange. Liquidity never sleeps, it auto-compounds. That's why comparing Solana to Nasdaq isn't hyperbole. It's a lens into the new capital markets forming outside traditional exchanges. Chapter 6. QQQ and the concentration of innovation. Let's refine the analogy. The Nasdaq index contains thousands of companies, but only a few drive most of the returns. That's why investors use the Nasdaq 100 ETF, QQQ, to focus exposure on the top players: Apple, Amazon, Nvidia, Microsoft, Meta, Tesla. QQQ is the distilled essence of Web2 innovation. Now, in Web3, Solana acts as the same concentration mechanism. It aggregates the top-performing protocols, applications, and tokens on one high-performance chain. If QQQ is a portfolio of centralized innovators, Solana is an ecosystem of decentralized ones. In both cases, the outcome is network dominance. Chapter 7. Power Laws and the Winner-Take-All Effect. Innovation always follows power laws. In Nasdaq, a handful of firms generate 80% of the index's value. In Solana, a handful of protocols like Jupiter, Helium, Tensor, and MarginFi absorb 80% of the network's liquidity and attention. The structure is the same, the ownership model is different. Nasdaq equity flows to shareholders. Solana tokenomics flows to users who participate. In other words, Solana doesn't just distribute products, it distributes ownership. Chapter 8, the data layer, speed, latency, and liquidity. Nasdaq executes trades in microseconds. Solana executes in milliseconds. But here's the philosophical difference. Nasdaq speed serves profit maximization for brokers and funds. Solana speed serves protocol composability. Every Solana transaction can trigger another smart contract automatically, creating chain reactions of liquidity. This composability is the economic engine of Web3, similar to how APIs revolutionized Web2. In 2000, APIs let apps talk to each other. In 2025, smart contracts let money talk to money. That's not evolution, it's mutation. Chapter 9. Adoption Metrics, the Language of Growth. Nasdaq measures adoption through revenue, EPS, and user bases. Solana measures adoption through transaction count, wallet creation, and on-chain activity. As of 2025, over 100 million wallets created on Solana, daily transactions exceeding 50 million, billions in DeFi total value locked. These aren't speculative numbers, they're activity metrics of a functioning digital economy. If Nasdaq tracks corporations, Solana tracks code-based economies. Chapter 10. Market Psychology. Every market structure creates its own psychology. Nasdaq investors think in quarterly earnings, dividends, and macro data. Solana participants think in epochs, airdrops, and validator rewards. One group is incentivized by stability. The other is driven by iteration. That's why volatility isn't a bug in Solana. It's a feature. It compresses innovation cycles. What takes Nasdaq-listed firms years to iterate, Solana protocols can fork and redeploy in days. Chapter 11. Institutional Convergence. Here's where the story deepens. Institutional investors are no longer ignoring crypto. They're mapping its structure to traditional portfolios. BlackRock's tokenization thesis, Franklin Templeton's blockchain funds, Nasdaq's own digital asset division. These are not experiments, they're signals. The traditional markets are colonizing blockchain infrastructure. But Solana flips the direction. Blockchain is colonizing finance. Each Solana validator is effectively a decentralized exchange node. Each liquidity pool functions like a micro ETF. Each wallet is a self-custodied brokerage account. In other words, Solana isn't a Nasdaq alternative. It's a Nasdaq fractalized into thousands of autonomous agents. Chapter 12. The Macro Shift. To understand this transformation, step back. Global liquidity is migrating from centralized exchanges to decentralized protocols. Value creation is shifting from corporations to code bases. The same way Nasdaq replaced the trading pits of the 20th century, Solana is replacing the matching engines of the 21st. The future isn't one Nasdaq. It's millions of micro Nasdaqs, operating simultaneously, interoperable, and borderless. Chapter 13. The Convergence Era. AI, tokenization, and the new financial architecture. AI and blockchain are converging. Nasdaq represents human capital allocation. Solana represents algorithmic capital allocation. In the coming decade, AI agents will trade, lend, borrow, and govern autonomously on-chain. Ethereum's agent-friendly protocols like ERC 8004 are already paving that road. Solana, with its speed, execution, and cost efficiency, is the natural substrate for machine-to-machine finance. Imagine autonomous agents operating liquidity strategies, executing arbitrage, staking, and even creating synthetic ETFs,
all without humans. That's not science fiction. That's the trajectory of decentralized automation. Nasdaq gave birth to electronic trading. Solana will give birth to autonomous markets. Chapter 14. Governance, Power, and the Economics of Control. Power is the invisible layer of every financial system. Nasdaq's power is centralized, controlled by regulators, exchanges, and corporate boards. Solana's power is distributed, governed by validators, developers, and token holders. In the Nasdaq world, access is a privilege. In Solana's world, access is protocol-level freedom. But decentralization comes with trade-offs. Speed, efficiency, and security constantly fight for balance. Solana's outages in early years exposed these weaknesses, but its recovery and network upgrades proved resilience. The network is evolving the way early Wall Street did, through trial, failure, and iteration. Chapter 15. The Future of Market Infrastructure. So where does this lead? To a bifurcated world. Centralized markets like Nasdaq for institutional trust and regulation. Decentralized networks like Solana for innovation, experimentation, and composability. Over time, these worlds won't compete, they'll integrate. Tokenized securities, on-chain ETFs, AI-driven market makers, all will bridge the two systems. By 2030, Nasdaq listings may settle on blockchains. By 2040, those blockchains might become the exchanges. Solana isn't the new Nasdaq. It's the next phase of what Nasdaq always represented, technological acceleration applied to finance. Chapter 16, Final Synthesis. Nasdaq equals stability, scale, regulation, and human governance. Solana equals speed, decentralization, automation, and machine governance. Both are expressions of human progress. Both symbolize a bet on technology. But while Nasdaq represents the institutional task of innovation, Solana represents the autonomous future of value exchange. When analysts call Solana the Nasdaq of Web3, they're half right. The deeper truth is this. Solana is the prototype of a self-evolving, borderless financial organism. You've been watching The Block Analyst, where we decode the architecture of money, markets, and the code that's redefining them. This video is for educational purposes only and not financial advice. If you found value in this analysis, share it with someone who still thinks crypto is just speculation. Because the next Nasdaq won't be built on Wall Street. It's being built block by block on Solana.